Tackle today, Justice Brothers from Tackle Trading, bringing you all the charts, news, and analysis so you can be informed in your trading decisions in just a few minutes. Markets digesting, moving averages holding. If you want to learn about moving averages, technical analysis, we got a master trader event coming up in a few days. Be sure to sign up for a free pro membership so you can attend that world-class class. Matt, it's a great class. It's a great foundational class for technical analysis. And these markets are technical. Get used to it.
Yeah, they certainly are technical here. We were expecting a little bit of secondary pattern development, Mark, and we have certainly gotten that secondary development. Feels like a good bout of consolidation here at the top end of the price action. You're seeing a very controlled consolidation, not a tremendous amount of volatility. You can see it very clearly, just kind of consolidating between 595 and that 600, just a 5-point range of consolidation. The last time we went through this consolidation, it was a little bit of a 10-point range. This time it's really tightened up, seeing that as a defensive, the market playing a little bit of defense at the top end of the channel. That 9 EMA is catching up. Secondary development is certainly occurring here.
No, absolutely. Listen, and I talked about this in the written portion of Tackle today. Like things like finance. Let's just take a quick look at finance. We're going to do a full detailed in our newsletter breakdown of all of the sectors and that. It's control patterns. This is one of the most beautiful things, in the market to me is a control pattern after a big surge. Because what it does next week and the week after, things like JP Morgan, Bank of America, insurance companies, right? Sets up a ton of individual trades. And that's the part of this rally that we're in right now, isn't it?
Well, absolutely. But I also think it's very important to understand that the market moved very aggressively post-election. You saw a gap up. Finance, obviously, we're looking at here, but you saw a gap up, and you've seen a really aggressive move in a short time. When you see those types of moves, it is not abnormal to go through some consolidation, allow those shorter duration moving averages to catch up. Those shorter duration moving averages are what we call the 9 EMA, and that 9 EMA represented here by that pink line on the chart is playing is trying to catch up.
It takes a minute when you gap up 10 per billion percent.
It takes more than a day, no doubt about that.
Yeah, listen, on the economic news front today, we had producer price inflationary numbers, we had unemployment claims. But Matt, CPI yesterday, PPI today, really non-events, right?
Mm-hmm.
Like didn't change anything. People will still be worried about inflation if we see those uptick, but they didn't really give them reason to worry today too much, right?
Well, I mean, when we're having a little bit of a different conversation than inflation, and in the inflationary week, you only get inline reports, they're not going to move the needle that much. And so inflation is a secondary report right now. Obviously, it's starting to get a little bit more concerning, but I do want to emphasize the little part of that. Obviously, we haven't seen the contraction underneath 2.4 as we saw over the year-over-year numbers last month. And so you did get a little bit of a bump up this month, but one data point is one data point, and it didn't miss. Obviously, that was baked into the price. So you're right. It's not moving the needle this week, but it shouldn't move the needle this week if you're talking about inline reports right where the market was expecting.
Yeah, no, listen, and retail sales tomorrow, and then a pretty light economic calendar for the coming weeks will really give you confidence in the pattern development because you're not getting earnings season behind us, no Fed meeting, no election, no real economic reports. Like patterns, when they develop, when they trigger, you're gonna have a lot of confidence in them with the minimal amount of catalysts on the calendar, aren't you?
Yeah, of course you are, and secondarily, you're going into a fairly decent positive seasonality for the stock market as well. That mid-November through end of December type seasonality usually does kickstart as well.
Yeah, absolutely. And so we're on the lookout for individual stock setups. What individual stock stories do you have for us today?
We got a couple stocks in the news here today. First and foremost, Disney did report earnings here today, and they gapped up fairly significantly. We'll talk about the chart here in just 1 second, but they did officially beat by 4%. That is less than the average EPS beat we're seeing in the market. Revenue is up 6.3% year over year. They and those are just paltry numbers, walk on the beach type numbers for Disney. Why Disney gapped up significantly here today was on the guidance side of the equation, as they do raise fiscal 25 guidance by about 5% as well. And so a little bit of a increase in of guidance showed lift off here for Disney. Now, from a technical perspective, you're going to see this as a little bit of an exhaustion gap. Exhaustion gaps have a tendency to fill the gap. The reason I say that is the market was already running hot. It gapped up, but it didn't run away from the gap. You would put this on a gap fill down to the 9 EMA if you're looking at Disney. Moving on, let's talk about Cisco Systems, as they're also reporting earnings here today, and they reported a 4% beat as well, right in line with where Disney was as well. Revenue was actually down 5.6% year over year, and they raised fiscal guidance just slightly, but raised by about 2%. Not a significant price difference from yesterday, obviously showing a little bit of volatility at the top end of this chart that you're looking at on Cisco. You look at this from a little bit of a longer term perspective, and you're starting to come into some significant overhead resistance. And that may be one of the reasons why you aren't seeing an oversized price movement following an increase in guidance. Overall, a little bit of a mixed report coming out of Cisco with that miss on the revenue side of the equation. And then ASML is in the news a little bit here today because I found it funny why they were in the news here today, quite frankly. They reaffirmed guidance, Mark. They didn't reaffirm guidance in 2025.
I didn't get this is why you watched the tackle today. I missed that story.
They did. They reaffirmed guidance, not for 24, not for 25, not for 26. What they did was they reaffirmed guidance for 2030. They're like, hey guys, we know we got some problems today.
Algos did honestly listen, Algos didn't know how to respond to that.
Algos didn't catch that 2030 number coming.
They didn't know how to respond. They're like, we don't know how to do that.
I thought this was the most silly.
Oh my gosh, they found a new trick to trick algos. That's hilarious.
And you'll probably see it on other companies as well. But as somebody who breaks down earnings reports religiously for tackle trading, I've done it for years and years and years. This is a ridiculously silly guidance update coming out of ASML. Hey guys, know we have problems today, but by 2030, we're going to get all those problems resolved.
Wow.
Reaffirm our 23 guidance update. And that is all the stocks we have in the news for today there, Chucky.
Listen, dollar and yields taking the day off after relentless moves, tried to move and then was just like, we're really, really tired. Like, I think that's what happened today. Like, that's an interesting candlestick pattern, Matt. You see those a lot when things are exhausted, don't you?
Well, and I would think that the dollar would be exhausted here. And I'm not just talking post-election. This thing has only had one pivot from 100 all the way up to 107. And you might say a 7% move isn't that big. We see that on Disney here today. I'm sorry, we're talking about the United States dollar and the liquidity of the entire $5.7 trillion currency market every single day. It takes a lot to get that to move. From a technical perspective, Mark, the number one thing that really stands out to me today is you came in and you wicked that upper wick of the zone. That's where the upper wick of today was, right here against these wicks that we saw. Remember, the resistance zone is 100 to 106 to 107. And so when you're looking at that candle here today, a little bit of an evening star candle was signified that is an exhausted candle looking for a little bit of a pullback. Now, does that pullback turn into increasing volatility at the top end of the chart, reversal patterns with double tops against 107? We'll have to wait and see that. But as of today, showing a little bit of exhaustion on this pretty aggressive move the dollar has done over the course of the last month and a half.
Yeah, and commodities as a whole basically taking the day off, which is news in and of itself because they haven't taken many days off. They've been getting hit pretty hard. I mean, you look at if you do not believe that algos and the dollar are 100% tied with precious metals right now, reverse candlestick, right? I mean, the things are just completely tied in algo programs, one with the other right now.
Yeah, 100%, Mark. These are not human beings making these 100% opposite pictures on the candlestick. These are algorithms that are pre-programmed following the election. And once those things get priced in, we'll start to see separation. But as of right now, if the dollar goes down, I'm willing to bet commodities go up tomorrow.
Yeah, it's a pretty good bet right now. And then eventually we'll see separation. And we're seeing similar things in silver. Crude oil taking the day off, Bitcoin down a little bit, fairly uninteresting, which is different, right? But uninteresting tends to set up the next bottoming
I
patterns or
will take
topping patterns.
I will take a week and a half of uninteresting in the commodity space right now.
It will be very, very, very good, very, very good. So we're going to continue to follow that. We're going to continue in these conversations. Matt's going to be on the lounge with Coach Greg Holmes today. Uh, Anything to add on Bitcoin before we close out?
Nothing to add on Bitcoin before we do officially close out, other than kind of what we were talking about on the dollar, showing a little bit of exhaustion here on Bitcoin as it does try to test that breakout channel 3 days in a row above 90K, really showing you're seeing a little bit of secondary development here as well. Not abnormal. We saw very aggressive moves following Trump's victory last week on the Trump trade. Now you're just seeing a little bit of exhaustion, secondary pattern development. Nothing too scary out there right now.
Listen, it's going to be a great lounge today. You want to be part of that lounge. Even if you can't attend live, you can watch the recording shortly thereafter. It's a fantastic place to have a community. Go to tackletrading.com, sign up for that 15 free trial today.